Thanks, everybody, for coming to the panel on Bitcoin. We are saving the best for last here at the Milken Institute Global Conference because I think this is going to be one of our absolute best panels. Bitcoin has a lot of attention now in the media and in the world, and it might be one of the truly disruptive technologies. And what I want you to get out of this session is not just the idea of Bitcoin as a virtual currency, but also the idea of Bitcoin as a truly disruptive and truly, frankly, brilliant technology. And so we're going to explore both of those things. First, we'll talk about Bitcoin as a currency. Is it a good type of money as money is defined? And then we'll move beyond that, though, to just talk about why cyber people and technical people are so excited about this solution and how kind of revolutionary it really is. And I'm very happy to have an esteemed group of panelists up here with me. First, Gavin Andresen, who's the chief scientist of the Bitcoin Foundation. You could think of him as the Linus Torvalds of Bitcoin. To his left is Megan Burton, who's the founder and CEO of CoinEx. And she's well known in the community for checking all of the regulatory boxes before she kind of got up and running. So she's trying to do it right for the long term. To my left is Charlie Lee, who's the software engineer of Coinbase and also the creator of Litecoin. So giving Bitcoin a bit of a run for its money. And we'll talk about the alternative types of currencies. Bitcoin is not maybe the only solution. And then to my far left is Brock Pierce, who's the co-founder of GoCoin. And if I tried to name every company that he has founded or co-founded, we would spend the entire hour going through that. So I will leave it at that. First, Gavin, nobody knows more about how Bitcoin works than you do. Can you just give us sort of the quick answer? Well, not the quick answer, but what is Bitcoin exactly? You know, when Satoshi Nakamoto sort of created this currency, what were the problems that he was trying to solve, and how does it work exactly, so that we can, in a way that we can understand?
Sure. The short answer to what is Bitcoin is cash for the internet. So if you think about cash, it's a person-to-person, a way of transacting some value from person to person that doesn't involve some other institution, right? So when I give cash to somebody, it's a transaction that just happens between the two of us. Bitcoin was designed to be cash for the internet. That was the problem Satoshi was trying to solve. That's kind of the high level. What it really is under the covers, if you dig a little bit, is it's a global distributed ledger. So I'll unpack that a little bit. It's a ledger, so it records transactions, just like your bank account records transactions. So every Bitcoin transaction is published across this global network. That's where the global distributed comes in. And all of the computers on this network are validating the transactions, making sure that they are correct, recording how much the transaction was, and really importantly, when it happened. It's really important to know the order of transactions. If you've ever overdrawn your bank account, you know how important it is that you get the order of transactions right, because otherwise, you'll find out that your paycheck didn't actually happen before that credit card bill got paid. So those are the problems Satoshi tried to solve. And it's interesting because digital cash had been a big topic in the 90s, and a lot of people had put a lot of work into solving the digital cash problem. How do you create a cash that can work on a network? And there were some attempts at creating a centralized digital cash, and there were actually centralized digital cash systems created. Satoshi's brilliance was in creating a completely decentralized internet cash system.
So who's the cop, then?
That's the interesting thing. Everybody is the cop. So this is an open source network. Anybody in the world can choose to download and run some Bitcoin software. They can participate in the network, and even more than participate in the network, they are the network. So everybody who's running this software is the Bitcoin network. They are the cop. Everybody checks everybody else, and that's how we get so much trust in Bitcoin, and that's how come it has bootstrapped itself from this crazy idea into a very valuable commodity. So everybody checks everybody else's transactions.
And why are they incented to do that?
The incentives in Bitcoin, I think, are perhaps the most brilliant thing about the system. I mean, when Satoshi basically took a bunch of technologies that already existed, a lot of which had been created for this digital cash that happened in the 90s, and put them together in a way that's what economists call incentive compatible. So, if you're a skeptic, and I actually, frankly, am a skeptic, that's a perfect question. Why would somebody bother to do all the work of validating these transactions? And the answer is because you get rewarded. And the thing you're rewarded with are these tokens called Bitcoins. So it was a beautiful way of tying together this work that needs to be done of validating transactions and storing them. At this point, to store all of the Bitcoin transactions is many gigabytes worth of your hard drive. And yet tens of thousands of people all over the world are doing that. And the reason they do that is because they are incentivized to do that, because they are the people who get new Bitcoins. So Bitcoins are created, and they're given to the people who are supporting the network and making the network work.
Okay. Brock, so that's Bitcoin. But how do you and I get Bitcoin? How does it work actually as the Bitcoin ecosystem? How can you earn Bitcoin? How do you spend Bitcoin? What is a wallet? What are these exchanges?
Yeah, I'll talk about kind of the infrastructure piece, but just to close out Gavin's comments, also there's a limited supply. There will never be more than 21 million Bitcoins, and they're being produced over a period of time where it's cut in half every 4 years. So that's ultimately a deflationary sort of currency.
And we're at about 12 now, are we?
We're between 12 and 13 million, and the mining will run for roughly another 100 years. Because it keeps dropping every 4 years in half. As the price goes up, the amount of coin being produced is going down. So it's being distributed on a relative basis to those people that are validating these transactions based upon their relative contribution. You do more of that work, you earn more of that coin, essentially. But so think of Bitcoin like the internet. It's a technology, no one owns it, no one controls it. It's run by a giant decentralized network of people. So like you would have the internet, there's people like me building internet companies. In this case, it's Bitcoin companies and building out the Bitcoin ecosystem. And so most of what I've been doing when looking for sort of where are the opportunities is just stealing a page out of the history books in the financial services space, because it's really basic infrastructure right now. What are the things that we need in the traditional financial services world, and how are they applicable to Bitcoin? The only key difference is typically you don't have counterparties in a lot of Bitcoin transactions in the way that you do in most of the financial services industry. There's in the financial services space, you often have a number of participants in a transaction that their primary role is just to be a trusted counterparty. You don't need that in most instances for Bitcoin.
Okay, so how does
payment companies, so you have a currency. First of all, people have to be able to get their hands on it. Think of this as the on-ramps and the off-ramps. In the same way that you would take US dollars and convert them into euros, you have to have exchanges or points where people have the ability to convert their existing fiat currency into Bitcoin. The areas in which that's being done today is through services like local Bitcoins, where people can meet up in person, and I'll trade my dollars for your euros. In this case, it happens to be Bitcoin. This is peer-to-peer transactions, but where people meet up. You've got Bitcoin ATMs being rolled out all over the world, where you can go up to a machine and put cash in and get Bitcoin, or walk up to that machine and put Bitcoin in and withdraw cash. You've got online sort of retail exchanges where you've got the ability to connect your bank account and do an ACH transaction, again, convert money. You've got large-scale sort of institutional type exchanges where the large sort of trades occur, or the large institutional buyers are likely to do so. So you've got all these, call it the on-ramps and the off-ramps, where you can convert money in and convert money out. So that's obviously a critical component. If the only way to get Bitcoin was through mining, it's obviously never going to be very big. So that's the main focus, is creating those on-ramps and off-ramps everywhere in the world you possibly can. And you need them in all these places. Any of these businesses need local sort of boots on the street, understanding of local regulation, and you need ultimately some sort of local banking relationship, because you're ending up with fiat, and you need to have a place to put it and ultimately facilitate those transactions. Other areas are, once you have your Bitcoin, unless you're purely a speculative investor, you want to be able to do something with it. You may want to spend it. So the area of payments, There's companies that are going out to merchants and saying, let me enable Bitcoin payments in the same way if you were selling a product or service on the internet or in a store, a cup of coffee, you would have Visa, MasterCard, payment processing sort of services. You may have things like PayPal, which at one point was an alternative payment system like Bitcoin. And so there's merchant companies that are going out and providing this payment platform so that you can accept that, so me as a user can go pay. That's an area of focus. There's also an interesting new area where people are building transitionary technologies where you can take like a MasterCard debit card, or a decoupled card in this case, and you can now attach that to a Bitcoin wallet. So you can take this new technology and put it on top of an existing rail so that you can spend Bitcoin in the 28 million locations that MasterCard has accepted.
Okay.
Or you can walk up to any existing ATM and stick your card in and withdraw cash. So very sort of basic services, mining, which is the area of equipment. When you used to run the Bitcoin software, you would do that with your regular computer using a GPU. But because the financial incentive in this case was so great, called $1 billion a year of value is being issued to those people running the software, people started to compete to do that better, to get a larger share of that reward. And then they started buying higher end graphic cards, and then we started creating semiconductors or silicon chips that are designed only to mine Bitcoin, what are called ASICs, or application-specific integrated circuits. And these are chips that actually have the software inside it, so it works really, really well. And it can only do that one thing, but it does it really, really efficiently.
And we'll get back to that, kind of the infrastructure of it. But I want to focus a little bit more on just the consumer. And Charlie, how does it work? How does a Bitcoin transaction work? And how do merchants use the infrastructure? I mean, there's no coins actually. So how does this all actually go down?
So like Evan said, the Bitcoin is a global ledger. So you don't actually hold any coins. You just hold. There's an entry in the ledger saying this address holds this amount of coin. And if you have the private key of that address, this is where the cryptography comes in. If you have the private key of the address, then you can spend it, because you can sign a transaction that sends the coins to someone else. So owning the private key means you own the coins associated with that private key. So like, for example, if you want to go to an online site to spend some Bitcoins, the website will give you an address for you to send the coins to.
Okay.
So you, using your Bitcoin client or online Bitcoin wallet, you would create a transaction, sign the transaction with your key, broadcast it to the network. And when the network receives it, people all validate it, verify it. Once it goes into a block, goes into the global ledger, it's confirmed, and the coin now belongs to someone else because you've actually signed away the privilege to use that coin to someone else.
But it's not associated with you as a person, right? I mean, it's not an anonymous currency, but it's a pseudonymous currency, right? So how does that, what does that mean exactly?
So what that means is, so you have, the coins are located in Bitcoin addresses, but no one really knows who owns a Bitcoin address unless you publicize it, right? So if you don't publicize that you own this Bitcoin address and you spend it, no one really knows who actually spent the coin, or for that matter, who actually received the coin, because you're also sending it to the Bitcoin address, which is just a bunch of numbers and letters.
Okay. And don't lose your private key, right?
Yeah.
And so I guess I want to ask everybody, how do you keep the private key safe? Or anybody that wants to answer the question.
This is back to, again, the infrastructure side. So one of the other categories is people designing wallets so that you can store your Bitcoin.
Okay.
And because that infrastructure didn't exist, you needed to be very sensitive and very careful as to how you did it. But now we're building next generation software that makes that relatively easy by creating multiple signatures and multi-factor authentication, and these sorts of systems allow the wallet to never hold your coin, and at the same time provide you with a high level of sort of security as to how you can be able to transfer those coins, and in a way where, again, you're not at risk of them failing for some reason. You have a very simple and high quality interface that allows you to manipulate how you're going to utilize those coins that you own.
Okay. What happened at Mt. Gox, Brock?
Mt. Gox is the most well-known company in the Bitcoin ecosystem, and most of you may have everyone in this room reads the news fairly often, certainly financial news. So, company that think of it as a Bitcoin bank, and they were holding $500 million of customer deposits, and the bank lost the customers' money. So there's 127,000 people that lost $500 million worth of value that they'd been storing at this bank due to, I don't think it's clear yet exactly how it was lost. There's multiple things that have contributed to that, which could be someone losing the private key, for example. There may have been theft that contributed to this, and then some less, I think, significant issues. Those would be the main two. They did, though, find 200,000 of Bitcoin, so about a quarter of the, or 20% of the lost funds have now been found, and it's very possible that more of those funds will be found. One thing we need to know is what happened, how, and why, and I don't think that's clear yet, and I'm not sure that even the company itself at this point knows.
Okay, so if you don't know, I would be surprised if a lot of other people knew.
I'm also bidding to buy the company out of bankruptcy right now to try and...
I wasn't sure if I was allowed to mention that,
It's
but I
pretty
did.
public at this point, so yeah,
Okay,
I'm
all right.
more than comfortable talking about it.
So, Megan, talk to us about the regulation a bit about this. So first of all, how are virtual currencies regulated in the United States, just kind of broadly? And then how should we think about Bitcoin? Is it a currency? Is it a commodity? Is it something else? What does it matter? How does it regulate it at the federal level versus the state level? How should we, conscientious people, sort of approach this?
So there's the federal ruling, which is FinCEN, who says that we are money transmitters in the sense at the exchange level, in the sense that we are taking something of monetary value and remitting it somewhere else. And that concept of just the movement of money falls under their definition of money transmission. But then, being the great republic that we are, we have all the states. And at the state level, each state has a different set of statutes and rules and guidelines that they use to protect their consumers. So each state will have different rules that may conflict with another state or may even conflict with other rules that are out there. In terms of the actual regulatory environment, is it a currency or is it a commodity? It spans all of it, depending on who you ask. If you're asking the IRS, if you're asking the state regulators, Department of Banking and Finance or Department of Banking and Oversight, it would be that it's more monetary. But we have about 5 outlying states in total that believe that it's not money.
Okay.
Don't even want to actually recognize it in a monetary value.
Okay.
So I think that it's a very complex environment. I think that environment's going to mature over time. Within the next year, I think we'll know where the states have settled out, what it's going to look like, and a little bit more of a clearer path of what that regulatory environment means to each level of the ecosystem.
Right, because one thing is the regulation and the other is the regulatory uncertainty that comes. But let me ask you, there's, it's not clear to me that Bitcoin is actually a good money, right? I mean, we central bankers, we've had a lot of central bank panels here, they worry about deflation much more than they worry about inflation. So is a deflationary currency actually a good thing about Bitcoin? And as a store of value, I think it's had sort of 30% volatility on a certain number of days, 3 or 4 days actually. And it's not a fiat, there's no central bank banking it up, you're not backing it up, you're not sort of forced to pay taxes in the currency. It seems to kind of fail the store of value test and maybe the payments test on a number of important criteria. And I'm wondering if you could respond to that, if anybody wants to kind of respond.
Depends on who you ask. I like it as a store of value because the deflationary nature means that over time, in theory, the purchasing power of my money is increasing over time rather than decreasing. As someone holding it, I personally like that attribute.
Yeah, back to fiat, back to the fiat currency.
As somebody who my salary is paid in Bitcoin, and it's actually very nice to get paid in a deflationary currency because I don't use my salary right away, and the general trend in Bitcoin value is going up over time. So for me, in practice, a deflationary currency is just fine and dandy. I think the volatility is a much bigger issue. The fact that the price has wild swings. Bitcoin advocates will say that volatility should get lower over time, and there's actually, Bitcoin's been around long enough that there have been some economists look at mining the data to figure out if volatility actually is decreasing over time, and it looks like it is. Mm-hmm. And so that's a problem that should take care of itself as more people participate, as more parts of the world get involved, as just there's more liquidity in the market, as the financial folks say.
Yeah, it's like a penny stock today. Once it's a large cap, it should be less volatile.
That's the idea.
It depends on how many merchants will take Bitcoin, right, Charlie?
Yeah, if you look up properties of money, there's a few set of properties of money that people all agree makes good money.
Okay.
And Bitcoin actually fulfills that much more so than any other currency out there right now. Like the US dollar is good money, but the government can print as much as they want. So it defeats the scarcity property. So once you can print as much as you want, then you can inflate it. One body can inflate it as much as they want, and then the value can drop. So with Bitcoin, it's fixed to 21 million. And unless everyone, like more than half the people agree to change it, it won't change. So because of that, it's scarce. And people like to think that gold is also good money. But the problem with gold is it's hard to divide it. If you have a gold coin, you can't like give someone half of your coin. And it's also hard to transport, right? If you want to send a lot of money to someone, you have to bring a lot of gold, or if you have dollars, you have a lot of cash. But with Bitcoin, it solves both of that. You can spend half a Bitcoin, a quarter of Bitcoin, or even like 1/10,000th of a Bitcoin and just submit that to the network.
And what's that called? What is the smallest?
The smallest unit is called a Satoshi. It's named after the founder. And also, so you can split it, and you can send tens of millions of dollars to someone in China that you don't know, if you want.
Right. And let me just read
But it's also a very young currency. I mean, the three properties that might be negative attributes being the volatility, the lack of acceptance because it is only 5 years old, or even the fact that it's still developing. You know, I think those three attributes alone are for the fact that it's a 5-year-old, are pretty common problems that it will be overcoming in the future years. But if you weigh that against the advantages that it has, the transparency, the neutrality, the security, the control, the minimization of fees, the freedom of payment, you're looking at something that's creating a tipping point. And it's transitioning from one state to another to becoming a mature currency.
Okay. And a couple of things that you didn't mention, at least explicitly, is sort of the access to, you just have to have access to a Wi-Fi or a cell phone. You don't have to fill out a credit card application. You don't have to bring your driver's license and get a bank account. Sort of the financial inclusion aspect of it could be fundamental. And then, Gavin, could something like what happened at Target happen with Bitcoin?
No. I mean, the Target data breach where, millions of credit card credentials were stolen and potentially millions of people were at the very least inconvenienced because you have to replace your credit card, that can't happen with Bitcoin. And Bitcoin's very much like cash in that if Target was accepting Bitcoin and they got hacked, they might lose the money that they have, but the criminals would have no ability to take money from their customers. And so I think we will see corporations start to think about that really hard and think about the problems that they have with keeping a good relationship with their customers when their customers are kind of unknowingly extending trust kind of into these big merchants. And if you're a merchant, I think you would much rather not have that because there's always the risk that you'll violate that trust.
Right. And Megan, you mentioned low transaction fees, and I just thought I would throw out a few numbers about what kinds of the costs of transaction fees. So retail credit card transaction fees are about 2.5%. That's $260 billion annually. E-commerce fees are about 2.9% of transactions for about $18 billion annually. Remittances are an astounding, to me, 8.9. I mean, that's sort of criminal in my view. 8.9%, $48 billion annually. And bank transaction fees last year were $524 billion. So there's a lot of money on the table for a disruptive payment solution to come around and take. But none of this maybe is the most kind of the coolest thing about Bitcoin. And I think I want to move to thinking about the Bitcoin technology beyond just its role as a currency. And when you're at a cocktail party and you're trying to impress, a member of the opposite sex, what you really want to say is, Bitcoin is a distributed database where the order of transactions is agreed upon by everybody. And that's
sexy.
That is really, that is the sexy one-liner about what's very important about Bitcoin.
Never worked for me.
Because you came up with that. So what does that mean? What does that mean that I just said? What's going on? Why is this not about PayPal or just kind of electronic currency? This is much more fundamental than that.
It is. I mean, the problem Satoshi solved was kind of an unsolved problem in computer science, which it's known as what's a variation of the Byzantine generals problem.
Tell us what that is, the
Byzantine generals problem is, the idea is you have a bunch of generals who kind of sort of trust each other, and they all want to attack a city. And they will succeed if they all attack the city at the same time. But they'll fail if they don't. And this problem is set up as, how can the generals agree on a time to attack the city if maybe some of the generals, they're double crossers, or they're not trusting each other, or maybe, the communication paths are corrupted. And so this is a problem in distributed systems in computer science of how do you reach consensus in a world where you can't even agree on what time it is, right? So in the Bitcoin network, we have computers all over the world. Information takes time to get from one place to another. We have this problem with transactions that you really do need to know what order transactions happened in, because if I'm giving Megan some Bitcoin and I'm giving Brock some Bitcoin, I maybe could try to pull a fast one and give them the same Bitcoin. That's called the double spend problem, which is related to the Byzantine generals problem. And so Satoshi figured out a way of solving that problem, a way of creating this distributed ledger that everybody eventually agrees on. This is the order of transactions. This is exactly the history of the network. This is exactly who owns which Bitcoins.
And how does that work? Because this is really the technology that is so brilliant.
This is the technology. So the people who perform this work, again, are called Bitcoin miners. What they actually do is they run software on their computer that connects to the Bitcoin network, looks for all the transactions that are happening, gathers up transactions into what is called a block. There's a block of transactions where that miner is saying, these are the transactions that I've seen. I've validated to make sure there are no double spends, that everybody's following the rules. The miner then adds some extra information to that block. They add an identifier for the previous block, the one that was found 10 minutes ago.
Linking to them.
Linking in what's called a blockchain.
Okay.
The blockchain is the distributed ledger.
Okay.
They add the current time.
Okay.
It turns out to be important to have a rough idea of what time these blocks were found. They add one special transaction in the block, which awards them any transaction fees and the Bitcoin block reward, which right now is 25,000 millibitcoins per block. And then they also add this special number called a nonce, which is this cryptographic concept. Nonce just means number used once. It's just a number, actually. In the Bitcoin block, it's a number from 0 to 32 billion. Mm-hmm. And then they perform what's called a cryptographic hashing operation. So they run this mathematical formula over the block to create what's called a hash, which is you can think of it as a way of taking a whole bunch of data and just compressing it down into a smaller piece of data.
Okay.
The really critical thing about a hash is it only goes one way. So given a block of data, it's really easy to compute a hash. But given a hash, it's impossible to find the piece of data that would create that hash.
Yeah, that'd be a big lookup table.
Exactly. Well, yes, and these numbers are so large that it's just not physically possible to create a lookup table big enough to find the hash. And so the task that everybody on the Bitcoin network is doing is actually to find a hash that is small enough, to find a hash that satisfies what is called the proof of work. And so Brock mentioned there will only ever be 21 million Bitcoins. The reason we know that is because the miners creating this algorithm are prevented from creating too many Bitcoins by this proof of work function. And so what they're doing is they gather up the transactions, compute a hash, see if it matches. If not, they increment the nonce, increment that number from 0 to 32 billion, and try again and see did I get a hash that satisfies the network? If I did, woohoo, great, I'll announce my block to the whole network. That will become a new entry in this distributed ledger. Everybody can check my work very quickly to make sure that I followed all of the rules of the Bitcoin network. And everybody will agree, yes, those are now the valid transactions. And yes, whoever created that block is awarded with new Bitcoins that they'll be able to spend.
Okay, so I have two follow-up questions. One is, I think the point of this is actually to create work and to reward the winner for doing the most work. And the longest blockchain is one that has incorporated in it the most amount of work. But it's useless work, right? It's for no purpose.
It's only useful in that it makes a scarce supply of money.
Okay. So, but why can't you, fold protein or search for SETI or something like that? Why can't you kind of double task this to use all of that computer power?
It would be lovely if we could.
Okay.
There are certain properties that this proof of work has to have. The proof of work, it has to be basically random as to who solves it, right? You don't want to be able to pre-compute a bunch of solutions. And the reason you can't pre-compute a bunch of solutions is because every block includes a pointer to the last block. And so that makes it impossible to kind of work ahead and then spring a whole bunch of fake transaction history on the network.
Now, why can't I go back like 6 blocks or 7 blocks and change a transaction? Say, I didn't really pay Megan. I just sort of delete that line. Why? Maybe how is that prevented?
Well, the beauty of cryptographic hashing is if you change any bit in anything in the history, like all of the hashes in the future are different. So there's this property that, if you get a Bitcoin block with a bunch of transactions in it, you can trace back through the entire history of previous transactions and previous blocks to validate and be, as sure as cryptographers can be, and they're pretty darn sure that, these really were the transactions and nobody twiddled a bit somewhere. Again, because this hashing is a one-way function.
Okay. So tell me if this is the right one sentence for the layman. That you need in a banking system, Chase Bank to tell you, no, that $10 is gone from your account. You can't, if you've given it to Megan, you can't turn around and give it to Gavin. So the technological revolution here is that this happens. No, you've already paid Megan, you can't pay Gavin without having this kind of financial intermediary playing cop. Is that?
Exactly, yes.
Okay.
The entire Bitcoin network is being Chase Bank.
Okay. So, Brock, when we spoke about this on the phone, you had, 20 minutes worth of additional applications that you could use using this kind of fundamental technology of disintermediating the intermediary. And so can you get the audience excited about some of the kinds of things that this technology could be used for?
Yeah, so what we've talked about here is there's Bitcoin, the currency, and then there's the blockchain, or the Bitcoin, call it internet protocol. So not to get too technical, but if you think of kind of the internet and TCP/IP as the sort of underlying network, the blockchain is that, and Bitcoin, the currency, like HTTP or a website or an application, is the first application that was built on top of that platform.
Right.
And it was that first application that created the financial incentive for us to build that platform and that blockchain and that network. We now have the ability, because it exists, to build all sorts of interesting things on top of it that could extend beyond, nothing to do with financial services. And Mark Andreessen from Andreessen Horowitz, this is the point that he's been making, that this is as interesting, or potentially maybe even more interesting, a disruptive piece of technology than the internet was. It's going to impact every business and every industry on the planet to some degree. And so there's other things we can build. One of the products we just launched and did a financing for about a week ago is a company called MadeSafe and a SafeCoin, which is the idea of building a giant decentralized version of Dropbox storage. So you've got 100 gigabytes of disk space on your computer and allowing all that extra disk space all around the world to become available to people, but on a purely peer-to-peer, decentralized and distributed basis, where by making disk space available, I get to earn coin. By using disk space, I'm spending coins. So think kind of in the same way that you'd have a solar panel on your roof, and if you're adding electricity to the grid, you're earning value. If you're taking electricity from the grid, you're paying value. And so building the systems that we're already using today, but on top of a system such as the blockchain. Another interesting one that I'm following is a thing called the mesh coin, which is to do the same thing with connectivity. Take your Wi-Fi router, join the network, and you're providing bandwidth on a peer-to-peer basis to anyone in your vicinity, and you're earning value for having provided connectivity on top of a decentralized peer-to-peer system. And if you're taking bandwidth, you're paying. And it's pretty much every idea that exists. Forget just taking financial services and building that on top of the blockchain. You can build anything on top of this system because it's inherently secure and trustworthy. It's what I call the real internet sort of 2.0. And we can do some pretty cool things. The other point, since we kind of stepped off the currency for a second, I like to point out is, why does this all matter? Because we got through a lot of what is Bitcoin, why is this important? A huge percent of the world's population today does not have access to the global financial system. Even in this country, you have the unbanked, which is 50 or so million people. Bitcoin democratizes the global financial system in a way where every human being on the planet has equal access and the ability to participate as long as they own a phone. Yeah. That's a very, very big deal. I mean, if you're someone selling a product or service online today, and you're an internet company, you're inherently you have a global retail footprint because you're on the internet. Today, only about 25% of the potential customers that can walk through your doors today have the ability to transact with you because the payment systems we use were built 50 years ago and they require trust. If a Nigerian sort of customer or someone even in Hong Kong or China goes online to buy a product or service from you, they're most likely not going to be able to transact because the problem of the credit card company saying, I don't trust you, or the merchant saying, I don't trust you, or one of a dozen players within that ecosystem. So again, as an internet guy, this increases my total addressable market by 400% in terms of potential customers. Because it's digital cash, you've eliminated the need for trust.
And that's because transactions can't be reversed after about
Correct.
an hour.
If you've paid me, I know that money's good. You've given me the equivalent of cash like we were sitting here together, but now over the internet.
Yeah. So now Andreessen Horowitz gave Coinbase quite a bit of money. Why? What did they see in you? And what do you spell out the vision a little bit for what you think?
Sure.
And Bitcoin is not the only game in town, right? So maybe talk to us a little bit about some of the alternatives.
Okay. So Andreessen, they invested about $25 million in Coinbase earlier this year. The reason is because Coinbase is really trying to do everything. We're trying to make Bitcoin easy for everyone. So that includes having like a wallet for someone to hold coins in because they don't know how to do it themselves on their own computer. So we can secure the coins for them better than they can do it themselves. We also provide buy-sell, so you can buy and sell Bitcoins very easily, at least for US customers right now. You connect a bank account, do a purchase order, and then we do ACH transfer to get the money from your bank account and then give you Bitcoins. And then we also like instantly give you a few Bitcoins for you to play around with too. And then the last thing we do is we're a merchant. We do merchant tools. We provide services for merchants for them to accept Bitcoins easily. One of the biggest problems right now for merchants to accept Bitcoin is the volatility of Bitcoin, right? If they sell something for one Bitcoin worth $450 today, and then tomorrow it's only worth $200, then it totally destroys their margin. So what companies like Coinbase, what we do is we build tools for you to accept Bitcoins on your site, and then immediately we'll transfer dollars to the merchant's account. So they don't have to hold Bitcoins if they don't want to.
Okay.
They can if they want to, but most merchants today, they want to provide, they want to let their customers use Bitcoin because a lot of customers want to use Bitcoins, and they don't want to get hurt by the volatility.
Okay, all right. Megan, you know, at the end of the year, the Chinese government decided that banks were not going to be dealing with Bitcoin, Chinese banks. We've also heard in Russia the same kinds of regulations. How could the regulatory environment evolve for Bitcoin? And what are some of the risks that Bitcoin-based companies face when they think about kind of the regulatory evolution? And is it possible that, you know, and what is the state of the world as you see it? Will it be a better, safer world, or will it ruin kind of the cost advantages that Bitcoin has currently? Or can you make some kind of predictions about that?
So the regulatory environment clearly puts burden on Bitcoin in general because it adds a layer of cost that did not exist prior. But also with that burden comes some responsibilities that, you know, for protection mechanisms, anti-money laundering, things of that nature, or consumer protection. Quite simply, certain things in our Bitcoin world would not have happened had there been consumer protections in place, should the consumer want it. But I think if I were to make some predictions or kind of look long term and say, where are countries going? I think they're taking precautionary measures to be able to say, what is this? How do we dig into it? How do we protect our consumers, and how do we marry it up to the traditional systems? You know, anytime there's something new, there's this sense of fear. And I think that Bitcoin over the last 3 years really started to pique the public's interest. It started to pique the public's interest because they started seeing the value advantages of what it could do in a monetary transaction, how it can facilitate remittance globally, how it can remove the fees from a transaction, how it can actually connect two people. I think the brilliance of Bitcoin and what it can do for a consumer outweigh a lot of the disadvantages that might be on the other side, but it comes with the implications of countries that are fearful of what is it going to do to our currency, what is it going to do to our current systems, how do we deal with it, how do we marry it to the traditional regulation that we already have. I think the good thing is that the US in particular, they're very slow to the march, but once they got there, they realized, this isn't that far off from the traditional payments we already have. Here's where it fits. This is what it looks like. Maybe the statutes need tweaking just a little bit, but it fits very clearly under the statutes that already exist.
So they have a benign outlook towards.
I think that at least the countries that we're interfacing with, in Canada, we're seeing a lot of progression. The US, we're seeing progression. The UK, we're seeing progression. Europe, we're seeing progression. We're seeing other areas that are kind of retracting back, but I'm hopeful that it's perhaps a temporary contraction, that maybe they'll see the rest of the Western world leading forward with it and pick up the adoption path.
Okay. So let me ask all of you a series of questions for you to answer in sort of 4 or 5 sentences. If you could name the myth of Bitcoin that most drives you crazy, what would it be, and how can you correct the public understanding of it?
I think for me, the myth that Bitcoin is just for illegal activities is the one that drives me nuts.
Okay.
It's gotten a little bit better since the Silk Road online drug marketplace demonstrated that just because you're using Bitcoin, and that doesn't mean there's magical fairy dust, that means your illegal activities are beyond the reach of the law. But I think that is the myth that still persists in some places.
Okay.
I'm going to tie into that one. Bitcoin is a Ponzi scheme. That one actually really, I think to myself, do we know the definition of a Ponzi scheme? There is a key player at the top. Who is it? And the brilliance about Bitcoin is that the greatest innovation that it has is this system of trust and this decentralized, distributed nature of people that contribute to the general ledger. So it's a little bit of an education 101 to deflate that Ponzi scheme myth, but it's certainly one that you hear quite frequently.
Yeah, yeah.
One of the myths is it's hard to use Bitcoin. It's only for people who really understand the technology. But it's kind of like you don't really need to understand Visa to actually use Visa cards right now. So I would just urge people to actually try it. Like maybe open a Coinbase account, buy some Bitcoins, and go to overstock.com and spend some Bitcoins and buy some stuff. You'll find out how easy it is to use. So, yeah.
Some very good ones already taken, but probably, again, security or trust. Is Bitcoin safe? Is it secure? Bitcoin, the blockchain, the underlying infrastructure is inherently secure and trustworthy. And because of companies like Mt. Gox, people question that, but that's just early companies not having put in place the right corporate governance systems and controls, and now best practices are being improved upon. Like any emerging industry, early players, some are going to fall by the wayside due to having made bad decisions.
And I guess that's one of the benefits of a distributed system, is that one node can kind of go down and the whole thing doesn't fall apart.
Yeah, it'd be very, very difficult to shut Bitcoin down if it was even possible. You may have to basically shut down all forms of communication and electricity indefinitely.
Okay.
We might be getting to that point. Just the power of the network, it's been stated, and Gavin can correct me if I'm wrong here, but the power of the Bitcoin network at this point exceeds that of all the world's supercomputers combined.
Mm-hmm. Okay, well, doing useless work there, just to reiterate that.
Gavin can correct me if I misstated that. That's what I've read.
Okay, so then let me start with you for the next one and go back down this way. What is the, and then Gavin, I'll give you a chance to, what is the social revolution that you think Bitcoin is, or what do you think are the revolutionary properties for Bitcoin?
Oh, I mean, again, as I said, to democratize the financial system in a way where every human being has access to it. You start thinking about places, again, like the emerging market. Latin America, countries like Argentina and Venezuela today, where you've been working the last 20 years saving up all your money and you wake up one day and your bank account is at zero, not because of anything you did, but things outside of your control. We talk about the volatility of the currency. There's 200 currencies in this world, only about 4 I'm interested in owning. You start looking at the volatility of some of these other currencies and we normally don't see it because you live in a country and all your transactions and trade is occurring in the currency used in that country. And you don't see on a relative basis the volatility in your currency. Even take the US dollar vis-a-vis the euro in the last 10 years. Obviously, that's happening over an extended period of time. But in places like South America, where you have a government essentially fail from a financial perspective every 7 years, this is important to you. If you're in places like Africa, where I believe infrastructure is the center of sort of any systemic real issues that are happening there, you give people economic prosperity and these sorts of tools, everything else gets better. In the same way that they leapfrogged wired telecommunication because they didn't have the existing infrastructure in favor of mobile, I believe in a place like Africa, Bitcoin could become the primary banking system, the primary means of storing value, the primary way of paying for things. It could end up as a primary currency in some of these countries. So I think that's I think very valuable, and I believe as a result of those tools being available, this is going to enhance the lives of billions of people around the world and make their lives better.
Okay, dollar-euro has not been anywhere near as volatile as Bitcoin.
Oh, I was just saying that there is volatility and we normally don't see it. Clearly, I'm not comparing the dollar and the euro to Bitcoin's volatility.
Okay, all right. Anything else in terms of,
think
and we'll go,
one of
I'm
the-
sorry, we'll go down the line and then we'll take questions from the audience. So,
I think one of the strongest forces of Bitcoin is kind of the freedom of money. Currently, if you're using the US dollar, there's a lot of restrictions on how you can spend your dollars, right? The government says you can't, for example, donate to WikiLeaks, and you just can't because they prevented WikiLeaks from getting a bank account or a credit card processing. But with Bitcoin, no one can stop you. You have some Bitcoins, you want to support WikiLeaks, you donate to their Bitcoin address, and they'll get it.
Okay.
Also, like if the government prevents you from playing poker or online gambling because they don't agree with, they think gambling is bad. But if it's your money, right? So you should be able to spend it however you want.
Okay.
And with Bitcoin, you can.
okay. Megan?
I think I like how it changes status quo. The monetary system as we know it today is one that was, it kind of emerged from the mid-1800s. And it wasn't built for the digital commerce world as we know it today. I like that it changes the status quo and it evolves us to something that protects the consumers in a way that didn't exist back then. I believe that it will revolutionize the way we do payments. I believe it will revolutionize the way we live. And it will change the dynamics of how remittance is done globally.
Okay. Gavin, any?
Well, first, I agree with Brock. I think here in the US, it'll maybe make payments a little more convenient for us. I think in other parts of the world, it will be truly revolutionary. I don't know, one interesting thing that I'm not sure about is kind of, will it encourage people to save more rather than spend more?
Oh, interesting.
Because if your money gets more valuable over time, you have some incentive to really think about what are you spending it on, because I might be able to buy more later. We're all used to living in a world where our money inflates, right? Inflation means if I have $1 today, it'll buy less in a year. And does that,
But economists worry about that, right? Because you're putting off productive activity in hopes for a better deal later. So you don't buy the car, you don't make the purchase today, and that's what makes economists quite nervous about deflationary.
I know it does make economists nervous. I wonder. I don't know. I tend to be a bit of a liberal when I think about our emphasis on having things and wealth and just the whole economy seems arranged around spending. And I don't know, maybe it's because I'm an entrepreneur, but like investment and saving kind of resonate more with me than immediate spending. And I don't know, it'll be interesting to see.
You've given away how many Bitcoin so far?
Yes, I had the Bitcoin faucet that gave away 10,000 Bitcoins.
10,000 Bitcoin.
Back when Bitcoins were much less expensive than they are today.
All right. Okay, so we have...
That's $4.5 million.
Yeah.
At today's prices, that's not what I paid for them.
Great for, philanthropy. mean, I don't know if anyone caught Akon's panel, but Akon was talking about Bitcoin in Africa and why it's relevant. But you think about money from a philanthropic perspective, whether it's NGOs or whatever organization, to find its way into Africa. When that money gets sent today, it's going from one person's hands to another, often another, in some cases maybe another and another and another. The amount of money that's being sent and how much of it actually gets there and into the hands or into the underlying cause often is a lot less than was sent, and I'm imagining in some cases it might be zero. Right. Bitcoin gives you the ability to disperse money for social sort of causes into these regions of the world instantaneously with near perfect efficiency and complete and total and utter transparency, which is pretty cool.
Right. I mean, the first spike in Bitcoin prices was when Cyprus started, giving capital controls. And it was capital controls in Europe for the first time, and maybe deposits weren't safe. And that's when you saw the very first.
I hate to correct the moderator. That certainly wasn't the first spike in
Bitcoin prices. Okay, but one of the first I noticed.
It was the most recent one that led to the run-up and everything we've been seeing for the last year.
All right. Okay. So we'll have time for maybe one or two quick questions from the audience. So in the front row, why don't we collect three in the front row, right down the line.
Great, thanks. So Gavin, my question is for you. You point out that the hash function is a one-way function, just like a public key crypto system is a one-way function. What happens as computing power evolves and perhaps as quantum computing is developed? Does that potentially undermine the system when hash functions potentially become reversible?
Okay, let's keep going down.
Yes. How is money laundering and other illegal activities prevented?
Okay. Yep, and on the end?
And as an entrepreneur and a practical person, it seems that some of the issues that Brock brought forward, trading of storage and things like that, that actually the underlying technology may be proven to be valuable, be proven to be safe from the skeptics, and it would be a lot quicker and a lot easier to move than to money, as governments, 300 and some governments think you're messing with their stability and all the issues that they use money to protect, not just financial transactions. They use it for stability, growth, shrinkage, and all these other things. And this technology seems to me it might really explode if we used it for other digital currency, other digital trading systems. Mm-hmm. Comments on that?
Yep, over here. Sorry, it's hard to see hands, with the lights.
Bright lights.
Yeah, bright lights.
Hi, Matthew Mellon with CoinCo. Questions to you, Gavin. What was going on through your mind when you read the other day about MasterCard retaining a lobbyist for Bitcoin, against Bitcoin, rather?
Okay, why don't we start with these? We've got the MasterCard lobbyist, the potential threat from quantum computing power, the ability to build other things on top of the system. I guess that one would be for you, Brock.
So I'll do the quantum computing question.
And the money laundering, I'm sorry, and the money laundering, yeah.
That's easy to answer. Hashing actually is not, as far as computer scientists know, a problem that quantum computers can speed up a whole lot. They think it's maybe a factor of 2. The digital signature algorithm that Bitcoin uses, that might actually be a problem for Bitcoin. But happily, we know how we would change it if we need to. So if quantum computers do become a thing, we can actually change the way Bitcoin transactions are signed. And that would be a fairly easy change to roll out over the Bitcoin network. And so Bitcoin would just continue with using a different digital signature algorithm under the covers. And if you want details, send me email.
Okay, what about?
I'd add one point to that as well. Bitcoin, the idea, can't be uninvented. The disruption and the events to come are going to happen. Will it be Bitcoin or will it be something else? If Bitcoin fails, the idea will not fail in my mind. It will be because a significantly better technology came along and replaced it. Maybe there was an issue with quantum computing. Maybe there's some issue with the underlying protocol that no one's found yet. I find that highly unlikely. But Bitcoin, the idea, is going to impact the world in many of the ways that we've described. And if it fails, it's just because something better came along.
Okay. Money laundering?
Money laundering. I'm not a money laundering expert. But it always struck me that, money laundering with Bitcoin is maybe slightly more convenient than money laundering with cash. And
More
I think
convenient.
law enforcement, I'd say slightly more convenient. I mean, depending on...
I'll take the opposite side.
I'll take the opposite side.
Yeah, I think cash is a far better tool for money laundering. I think Bitcoin's not good for any illicit activity.
Due to the transparency of
The entire system is transparent. Every transaction is publicly visible. If you're going to go rob a bank, if you're going to go commit a crime, do you want to go shoot a flare in the sky that's so big the entire planet can see it? Do you want to draw that sort of attention to your illicit activity? And most people that have committed serious crimes using Bitcoin are in jail today. I would stick to cash if I were going to engage in any sort of significant illicit transactions.
What's your earlier point about Silk Road that
Yes, it is. I mean, it's interesting because, reading the academic papers that are coming out about Bitcoin, there's a whole group of academics that are working on kind of making Bitcoin transactions less private, try to figure out who's behind transactions. There's a whole nother group trying to figure out how can we improve Bitcoin so that transactions are more private, and it would be easier to get away with financial crimes. And it's going to be interesting to see kind of that arms race of where will we end up. And I think you're right now, you'd be stupid to use Bitcoin for money laundering at any scale. Just because you are incredibly likely to get caught.
Well, in the end, you still have to, there's the on-ramps and off-ramps, right? So the exchanges that exchanges Bitcoins for fiat, if you regulate those, then you can prevent people from getting in and out of Bitcoin.
Yeah, I operate a number of businesses here in the U.S., and, well, we do that. In the United States, the main functions I have where anything looks like it's an exchange is, again, is it a currency, a commodity, a security? It's got attributes of all of them. It isn't really any of them. So how do we regulate ourselves in an environment where the regulations are not yet tailored or bespoke for this industry? We err on the side of being conservative, and we take the most cumbersome sort of regulation sort of approach possible, so that if down the road someone says, hey, how did you handle your anti-money laundering policies, your KYC sort of analysis, we say, well, we've erred on the side of being as conservative as one could and took the highest bar for regulation there is, which is with cash. So if you want to modify it in some way, great, but we've put the bar as high as one possibly can today for anything that we're doing in this country.
And why does MasterCard care so much about how well Bitcoin does?
Innovator's dilemma, incumbent industry. You have a great business, you've got something that works very, very well today. You want to ride that as long as you possibly can. You don't want the world to change. And you often, even when you see that change coming and you know it's inevitable, it's very, very difficult to do because you normally need to undermine your existing business and compress your own margins. And certainly as public companies, when you're being graded on quarterly results, you got to be very, very bold and willing to take a massive risk to turn a ship like that. So the innovator's dilemma is a pretty clear concept, and as any incumbent industry, that's got a good thing going, they don't normally want change. But unfortunately, we live in a world that we've all heard many times at this conference. Disruption and innovation is happening and accelerating at a faster and faster and faster rate.
Okay.
And smart companies and the best ones out there today recognize that and try to embrace it earlier and earlier in the cycle.
Okay, so we've got 3 minutes left. So I want you all to very sort of quickly give me your predictions 10 years from now. What is a Bitcoin world going to look like? Put you on the spot. Whoever wants to go first.
More than 1 billion people using it. I'd go even shorter than that. I think we got 3 to 5 million people around the world using it today. Because in the same way Facebook and Twitter and these things can become massive in a very short period of time. The Internet of Information, if this is the Internet of money, took a long time to develop because you had to change human behavior from living in an analog world to a digital one. The speed at which things can go is it's faster and faster. I think we could go from 30 to 50 million users, from 3 to 5 million today to 30 to 50 by next year to 300 to 500 million the year after that, and we could be north of 1 billion people on the planet utilizing this in some way, sometimes not even knowing they're using it in the same way you use technologies today.
Megan, do you agree with that?
Yes, but I would like to say that from a disruption perspective, I think 10 years from now, it'll look like, it'll be the replacement of the rails of ACH and SWIFT and wires and SEPA as we know it today. It has the potential to replace the traditional mechanism and rail system for the movement of money.
Okay.
I think in 10 years, people will be able to live off of Bitcoin and other digital currencies, getting paid in Bitcoin and spend it, buy anything they want.
Okay. Gavin?
I don't know. I hope in 10 years, Bitcoin is really boring. And the only people who want to come to these kinds of events are, geeks like me who are interested in kind of nuts and bolts of how it works. And it's just a part of everyday life, but I really don't know.
Now, my last question, Gavin. We're all friends here. We're all friends here in this room. You are Satoshi Nakamoto. Come on, you can tell us.
I am not Satoshi Nakamoto.
Okay, have you met Satoshi Nakamoto?
I have never met Satoshi Nakamoto. I don't know.
Have you emailed with Satoshi Nakamoto?
I have emailed with Satoshi Nakamoto, yes. I've had many email conversations with him, although not recently. He did withdraw from the project. And nobody knows who he is, I think. I mean, there was a Dorian Satoshi Nakamoto recently in the press who they thought, some reporter thought, is Satoshi. It's actually interesting. The smallest unit of Bitcoin is called a Satoshi. There's been a proposal that a Bitcoin transaction that hasn't been confirmed yet, an unconfirmed Satoshi, should be called a Dorian. And I don't know, I think that might just stick.
That's hilarious. Okay, on that note, we'll conclude our panel. Thank you very much, everybody, for attending.